Okay.
Yeah, we don't really know what we're doing.
Hey everybody, how's it going? Week 11. Thanks for joining me. If you haven't been following along, this is a series where we open up a TFSA account and we deposit $100 a week, and we buy Canadian stocks. And every 2 weeks we do a video and show you what we purchased. So right on cue, right off the bat today. How's it going, buddy? This is Rio. He likes to pop in.
Hi, my name's Rio. I'm actually the typical dad 5-year-old, if you actually know that. If you want to buy stocks, you can just go to my channel, Typical Dad Investor.
Your channel. Well, you named it. It is kind of your channel. People want to see you more than anything. So let's have a look at what we bought in the last 2 weeks. We bought one share of Telus, and we added that. I like Telus because of the not just the telecom, but telehealth. I think there's a lot of growth potential there. We started a new position, Alimentation Couche-Tard. That is a convenience store, gas station chain out of Quebec. Couche-Tard, Circle K, Max Milk, those are store names. And it's a consumer defensive stock, which I don't normally buy. These stocks do well in a downturn. I don't normally buy stocks like that because I have a 20-year time horizon. So when there is a downturn, I just ride it out. I don't buy bonds and I don't buy consumer defensive, but this is a stock I liked regardless, so we started a position on that. PowerCorp is a company that owns a big chunk of Wealthsimple, which is the platform that we use. We added one more share of PowerCorp, bringing us to 3, and I believe that's it. We got our dividend from RioCan, 16 cents. And one more, we opened a position in Topicus. That's a company that was spun off of Constellation Software earlier in the year. I own Constellation in my other account, and I received 2 shares of Topicus, I believe, for every 1 share of Constellation Software. When I looked into the company, I liked what I saw, so I held on to them, and I've added it to this portfolio as well. QYOU also, we always add a few of those every week, so we did that. You doing all right over there, Rio?
Yes, just watching you talk in the camera and resting.
I wanted to talk a little bit about dividends. I received a question on that, whether this is a dividend portfolio or not. It is not. I don't buy any companies because of the dividend. That's just the benefit of investing in Canada. TSX has a 3% average yield. It's just that dividends are higher in Canada. Our dividend yield is actually, I think it's 2.7 or something like that. So it's below the average. I see a lot of YouTube portfolios with younger people that have dividend portfolios, and personally, I don't really see the point of having a dividend portfolio if you're going to reinvest the dividends. You're better off going with growth, in my opinion. I see a lot of stocks that trade flat, but they do have a higher yield, 4 or 5%, and they look attractive, so people will invest in those stocks and then reinvest the dividend. You're basically getting a 5% return, which is, if you show me a stock that has a 5% guaranteed growth every year, I'll be like, you can keep that. You can get 7% on average just by investing in an index fund. So the stocks I have, I do like for the growth. There is one that I purchased with an exit strategy in mind, and that is RioCan. Because if you look, I'll bring up the chart for RioCan. Over the past 5 years, it basically trades flat. It does have a high dividend yield that pays monthly, which is nice, but without the growth, it doesn't really do it for me. The reason I have it, and I will continue to add to it in the short term, is because it took a hit because of COVID, and it hasn't recovered back to the pre-pandemic levels. So it still has some growth to go, about, I would say, about 10% below pre-pandemic levels. Hey, buddy! So once that RioCan returns to those levels, we're out. Another question I had is about selling. Why? What would make me sell? Have I ever sold? I have sold. I sold Go Easy was a company I sold, or Easy Home might be more recognizable. They provide loans to people who don't qualify for bank loans. I sold it not because it wasn't a good stock. It was a very good stock, and it continues to be. I sold it because of the business practices. I couldn't get behind them. They sell or they have an extraordinarily high interest rate, and I feel takes advantage of people that are in a bad position. So I just couldn't reconcile that in my portfolio, so I had to get rid of it. I sold a lot of American stocks when I first got into Wealthsimple because I wasn't aware of the 1.5% fee for exchanging that I was paying every time I bought and sold. I liquidated all my U.S. Holdings in Wealthsimple, transferred them to Questrade. So yeah, when I buy stocks, I don't buy them with the intention of selling them, and I tend to buy companies that I feel I can hold on to. Yeah, that's about it.
All the time I was here trying to sit on your lap.
Oh, why didn't you just ask? Come on up. So I basically wrapped everything up. So you've got some time if you want to talk to the people. How was your day? I told them you had a busy day and that you might not show up for this video. What was your day like? What were you doing? You smell like outside. Were you outside?
Yeah.
What were you doing out there?
Playing with my trucks. And then I had to put them away because it started to rain.
Busy day.
Typical dad investor is not to be taken as investment advice. Please do your own research before purchasing stocks. We are not financial advisors. We are just a couple of guys on the internet. Oh, I forgot. Subscribe and like.
Good job.